Good morning. This is Mike Yonkman with a special update. I know many of you see our show over the weekend, and I thought I'd send this out just because it's a particularly volatile day on the market, which is about to open. And probably you haven't even looked at it yet, but that's certainly what we do at Ankerstar Wealth is we're following the markets day by day, hour by hour, and preparing some special updates certainly today. I know earlier today we put out our overall message to our current clients, and you can click on that link below. But I wanted to send a message out to some people maybe that are not clients and you're concerned. So before I get started, this is a financial education presentation. You must do your own due diligence on anything that you hear. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. I thought this would be exciting. I'll take you right into the market update. I'm going to share my screen. And you can see that the S&P 500 is down almost 4%. It has touched 4% earlier today. I'm showing the pre-market, but you can see even on a year-to-date basis, the last month has been particularly ugly with the drop-off. Still, the market is up. The S&P 500 is up a little bit over 5%. If I go to the NASDAQ, let me show you that. It's very ugly to look at today. So, but anyways, this is kind of what we are tracking. You know, what is causing this? The belief that we were going to have a nice soft landing definitely hit some turbulence with credit card default rates I mentioned over the weekend and unemployment creeping up. Throw in some geopolitical risk with the Iran stuff coming out over the weekend, and now we do have some political uncertainty on president. So all these events hitting at the same time, and this is what we get, a market sell-off. Before I hit the market open, I do want to show you a couple things. If we do hit a recession, call this the good news of recessions. We don't like recessions and drawdowns, but if you look at the 1 year, 3 year, and 5 year afterwards, they're very good. So we hit a recession, the average over the last, 70 years, average recession will take this market down 30%. But 1 year later, it's up 43%, which is probably about break even. 2 or 3 years later, it's up 65%, and 5 years later, it's up 101%, which is basically doubling your money in 5 years. So that's the good side of that. I'm going to reiterate this chart. I've shown this before, which is this is a 50-year graph of the S&P 500 with all kinds of major events in there from 9/11 to the great financial crisis. But the graph shows up and to the right. Overall, the market will go up. And certainly days like today are blips. We hope. And when in the moment, it doesn't feel like it. But, by the time, we get a few years down the road, that's what it tends to be. And then the last thing is just this one shows it with recession. So you see if we hit a recession, there is a drop. So what I'm going to do is I'm going to go over to the NASDAQ and pull this up live. And you can see the market here. Let me refresh my screen. And we'll see this thing start to hit live here momentarily. But I'm going to pull up a couple stocks as I go, just because, a lot of times people are wondering, like NVIDIA, one that lots of people discuss. Check out NVIDIA, down 14% today. This minute, it's down that much. Hit an all-time high of 140 just, I want to say, a month ago. Well, maybe it was in the last 2 months. But anyways, is this the same great company it was a month or two ago? Absolutely. But, with the economy and concerns, that's why this stock has come down. It went up the fastest. It's going to come down the fastest. But there may be buying opportunities in certain models that we have. So I want to point that out. Another stock that's our number one holding is Apple. And I'll show you that, what that's doing today. It is off 10% today, back under 200. And here, let me show you a graph. Big news on that one is Warren Buffett sold about half of his stake of Apple. So You know, I don't know why Warren sold it. Maybe you know, he knows something we don't, but he's certainly a very wise investor. So that one, I'm not sure why it's not refreshing. And let me just click on the breaking headline. Let's just take a look at the markets. You can see the NASDAQ is down 6.19%. I don't have it up on this graph right now, but there is a chart I've shown before. I want to say it was about 3-4 weeks ago. What happens when the market drops 5% in a day? Very positive things happen after that, but obviously that day is panic selling, and that can happen. So, you know, I just wanted to kind of have this special video for those of you that most of you are either not a client or you just recently became one, that you would get this. You're not on our daily distribution list, and I wanted to know that, you know, this is something we take serious. Depending on how your money is currently invested, you may be taking this very seriously today. But with that, and if you ever have questions, you certainly can email me or call our company or call me directly. I'd love to talk to you more about things. I hope this day turns green, but it may be down for a little bit, maybe until the Fed takes some special action. Likely they're going to cut the rates in September, possibly earlier. Very likely they're going to cut it in September, but the Fed may cut rates to try to spur the economy so we don't go into a full-blown recession. With that, I don't like to be the bearer of bad news, but it is bad news today, and you know, sometimes you can see this as a buying opportunity. I will give you one good side of this. If you are on the verge of buying a house, the 10-year bond rate will certainly be down, which it is. It's down to 3.68%. That is typically what the 30-year mortgage is calculated from. So if you're about to buy a house, guess what? Your interest rate that you'll pay should go down. Call your bank. You know, it should go down. It's certainly in the last couple days with the market sell-off. That's all I have. Thank you. Bye.